Cramer. Welcome to Mad Money. Welcome to Cramer Archive. To my friends, I'm just trying to make a little extra money. My job, not just to entertain, but to educate, to teach you how this business works. So call me, 1-800-743-CNBC, or tweet me at Jim Cramer. The next time you get too down about the stock market, I want you to remember this wonderful quarter where we got knocked down the canvas after Liberation Day, only to eventually rally all the way back and then some. I keep hearing the word resilient. I say, how about stellar? It was never easy, including today, when the S&P and the Nasdaq hit record levels, then reversed after President Trump broke off his trade talks with Canada because it imposed a digital services tax, made it retroactive to 2022. But then the market eventually shrugged off the Canadian spat, with the Dow gaining 422 points and both the S&P and the Nasdaq climbing 0.52%. The latter two closing at record highs. 9 out of 11 sectors were up today. This kind of stuff, so rare for so many years, has become commonplace in the last part of this quarter. Still, I think this market will remain strong, even in the face of a jarring story like the Canadian tariffs. The individual investor has learned that the best way to make money is to stand pat, stay in, maybe even add money into the declines, which has been the best strategy of all. While institutions flitted in and out and in and out and in and out, there's data that shows that the individual investor stayed in and even bought more on weakness. Yes, they bought the dip. It turned out to be right. That's pretty incredible. To stick with stocks during this period, you had to hold on through Liberation Day insanity, the endless calls by the president to get Fed Chief Jay Powell to step down because Trump wants immediate rate cuts, the nonstop chatter about how the economy would crumble under the weight of trade wars, the relatively high interest rates, and the endless, breathless chatter from Fed heads who end up not mattering anyway. It's a parade of horribles that requires you to hold your nose, avert your eyes, and keep buying. So I salute you for staying in. I know it couldn't have been easy to hang on through this decline, but it sure was worth it, wasn't it? Okay, now we did have this one anomaly at the end of the day, the annual Russell rebalancing, and that's where the Russell 1,000, 2,000, 3,000 rebalance to reflect changes in the market's capitalization. This is a big deal because there's really very little liquidity in some of these smaller stocks. Look for many of the most egregious moves that were done at the close today to be undone Monday morning, both on the buy and the sell side. People didn't seem to know about it. It's kind of strange because it used to be such a big topic of conversation. Now, also after the close, we got stress test results for the banks. It's an annual affair, which gives the banks that they get good grades a chance to buy back a lot more stock. All 22 banks passed their stress test tonight, not unusual. So maybe we can see a bunch of buybacks announced next week based on these good grades. I know that I have been very upfront about how Capital One, COF, good piece in the Wall Street Journal today about it, has an opportunity here. That would be the one that I think could do the best in terms of what people are thinking about going forward. With that out of the way, what's coming up next week? All right, a week that's really just 3.5 days, frankly, because of July 4th falls incredibly well. It falls on a Friday this year, and Thursday's now a half session. It's a slow week, but it does end with a bang. All right, now on Monday, we have a very special interview with Andy Jassy. He's the CEO of Amazon. It's a huge position for my charitable trust. We'll talk about everything from investments in rural delivery to new and improved Alexa to the growth of Amazon Web Services, the juicy gross margins of Amazon advertising, and why we love being Prime members. Given its retail presence, Amazon's got a great read on the consumer. Its international business seems to turn the corner. We need to talk AI and whether its own chips are a threat to NVIDIA's best semiconductors or just something that can be made to augment them. And, of course, we're going to talk about China. Right now, I'm concerned about the consumer after we got some weak consumer spending data today. I hope Amazon's Jassy can give us some color about how consumers are really spending. They seem stalled right now, something that should make the Federal Reserve think twice about whether they can really afford to wait before they start cutting interest rates again, which is really something that's very much on the table. Now, I'm not worried about the industrial portion of the economy, which has been pretty strong, but I am trying to figure out if the numbers have been distorted by orders pulled through because of the tariffs. That's why I'm more interested than usual in something called the Chicago PMI. I think it's the best indicator of the industrial economy, and it could influence interest rates if it is weak, putting even more pressure on the Fed to start cutting again. Right now, the market's pricing in an 18.6% chance of a rate cut at the July meeting, but a more than 93% likelihood to cut it by September. I don't know if we can wait that long. On Tuesday, we get results from former market darling Constellation Brands. What a fallen idol. There's so much to unpack here because this consumer packaged goods company is a microcosm of what's gone wrong with this now pathetic group that used to be the place to go when there's a slowdown. First, Constellation is an alcohol company, so all of their products are being hurt by the GLP-1 drugs, which can blunt your craving for booze. That's especially true for the big beers, which are Modelo, Corona, and then a new popular favorite, Pacifico. Second, increasingly surveys show that there's a switch from beer to cannabis because smoking weed is theoretically less fattening. I say theoretically because while alcohol has way more calories, it doesn't give you the munchies. This younger generation cares more about their health than previous ones. Sounds fanciful, but it is true. Third, Constellation said its sales have been hurt by concerns in the Hispanic community about mass deportations. The stock's been steadily declining all quarter. It's been downgraded by analysts, jumping ship from the company that used to beat and raise over and over and over again. Used to be a big position for my trust. That was then. Now, we expect Constellation to miss. We'll get the results Tuesday night, and the conference call will start on Wednesday morning. You'll probably see the stock jump up when it reports. That's what it typically does, and then it declines through the rest of the day. So let's be careful, okay? Also on Wednesday, we get mortgage application numbers, and these have become an albatross for the entire economy. As long as rates remain this high, we've come to accept anemic home sales, and given that housing punches above its weight, we know that this end of the economy will not be improving. Thursday's the key day of the week, all right? That's when we get the June non-farm payrolls report. It's an important number. It always is an important number. If we get a weak number, the president is most likely on that day going to call for Jay Powell's head again. Maybe be willing to name Powell's successor that day, much sooner than expected, if only to push Jay to start cutting rates or quit his job, which I think, by the way, he's not inclined to do. I don't think any one week number, even one as important as the labor report, will matter all that much. But if we see very few new jobs created, match that with lower or flat wages, perhaps the possibility of a July rate cut will be back on the table. The bottom line, we're headed for a shortened week after a terrific quarter, one that started horrendously and finished incredibly strong, showing you that staying the course is the only logical way to approach this often mercurial and treacherous market. Let's start with questions. Let's start with Rick in California. Rick.
Hey, Jim, I'm calling in from Napa.
From Napa? Oh, my God, I was there last Friday. Oh, I had such a good time. Yeah.
Hope you had a good time.
Probably saw you. I was in Calistoga.
Yeah. Oh, yeah, right on. Cool.
Absolutely.
Jim, the stock I wanted to ask you about, it's declined from its peak during the COVID days, but I believe its connection with healthcare and biotech gives it a lot of potential for growth. The stock I'm thinking about is Thermo Fisher.
I mean, this stock is unbelievable. It's a great company. Mark Castro does a terrific job, but we own Danaher for the Travel Trust, and it's as bad as Thermo Fisher. I am urging you to not buy it till we see a pickup in Chinese orders. I know that seems strange, but this stock has crushed a lot of people. It does seem like it's bottoming, but I am not going to push it because it's related to China, and anything related to China is bearish. Why don't we go to Chuck in Illinois, please, Chuck?
Jim, I bought a stock one of your viewers called in about. It's a great stock. I wrote it up 100 points and sold it. It dropped during the pandemic. Afterwards, it was fairly stagnant, so I bought others. Then it's up 25, 50, or 100 every time I see it. I'd have to sell some PIMCO with a 10% dividend to buy it. Should I buy it at over 800? Wait for a major pullback. Wait for a big split. The stock is AXON Industries.
All right. Look, I think Rick Smith is great. I have often thought about putting this on my in the bullpen for the Travel Trust, but it just won't quit. I think you have to buy. Look, if you want to buy 100 shares, buy 25 Monday, and then you got to wait for it to come down. You can't just buy it all right here because then I feel like that could be just the kiss. It would be just terrible if the stock came in once again all-time high today. Let's go to Frank in New York. Frank.
Hey, Jim, Mr. Professor. The other night, Micron, I mean, what a statement they came out with, and a fantastic forecast. The stock runs up and then it fades. What was that all about?
All right, well, this is not unusual for Micron. I've seen this happen many times with Micron. This stock went literally from 60 to 126, and they did a fantastic quarter, but there's no way that a stock that goes from 60 to 126 can go higher, no matter how good it is. This is a momentary pullback. and then you're going to have to start buying the stock all over again. I like the stock at 120. All right, listen, as we come up on the last day of the quarter next week, it's worth remembering that this is a market that rewards staying the course. Wow. On My Money tonight, Samsara is down on the year because of tariff concerns, but should investors take a closer look at the Internet of Things? That's as simple as IoT. Don't miss my exclusive with the CEO. Then, we've had an impressive recovery in tech, haven't we? But Apple, what do we do here? Hey, we'll tell you what to do because there's a certain point where Apple's too cheap. I'll give you my analysis. And the Investing Club members met this week, and you know what? We got some amazing questions left over from the monthly meeting. So I'm answering those questions because I do anything I can to help club members. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.